Hey, stop scrolling for just 1 second, because I'm going to say something that might make you uncomfortable today. Most creators are paying more tax than they really need to. And it's not because you're careless, and it's not because you're cheating, and trust me, it's not because you're bad with money. It's because nobody ever showed you how write-offs really work in creator life. And worse than that, you don't even know what you're missing. Let me ask you something. Have you ever filed your taxes and thought, I hope this is right? Have you ever looked at your tax return and felt relief, but not confidence? You might be saying, okay, I survived this. But you didn't really know if you left money on the table. Here's the truth. Creators miss write-offs because creator business doesn't look like a normal business. As I've talked about before, your income jumps around, those expenses blur, and your work overlaps with life, doesn't it? And the rules, hey, those rules are written for someone else. So today's video is not some quick tip. This is a calm masterclass. Like we're sitting across the desk from each other. This isn't about judgment. It's certainly not about fear. And it's certainly not, you should have known better. Today's just about clarity. Because write-offs aren't on a list. They're a system. And when you understand the system, taxes stop being a guessing game. You start making decisions like a real business owner. And that's the goal today. I'm going to show you how the write-offs most creators miss and the decision process that helps you spot them. I'm going to do it in a way that feels audit-ready, calm, and clean. And I warn you now, by the end of this episode, you're going to realize something. There are a lot more moving parts than you thought. Now, I'm not saying this to scare you. I just want to wake you up a little bit. Because creator taxes aren't hard because you're dumb. They're hard because creator business is real business. So if you've been guessing, if you've been hoping, if you've been telling yourself, I'll deal with it later, today is your wake-up call. Not with a panic, but with a plan. Sound good? Good. Let's get right to it. So today is not about IRS code or some textbook about tax write-offs. I live this. I have those uneven months, those platform payouts that are hard to figure out. I live through the gear upgrades and subscriptions everywhere. I've got the editors to pay and software to manage. And just like you, I got 1 month that feels amazing and the next month feels super tight. And the confusing part, you can be growing and still feel financially unsure, can't you? And it's not because you're failing, it's because nobody taught you how creator money actually works, especially with taxes. And the internet gives you loud advice. You hear this, write off everything. Or maybe you hear this one, don't write off anything, just get an LLC, that'll fix it. But today you don't need loud, you just need clear. And my job is simple. What I do here is I translate taxes into creator language so you can build a creator business that lasts. This is a safe space. This isn't about lectures, no scare tactics, and certainly no shame. Just a calm explanation with real examples and a system that you can understand. And listen, before we go any further, creators reach out to me all the time about these write-offs because write-offs feel like a minefield. They ask me questions like, if I deduct this, Ralph, is it okay? Hey, Ralph, what if I get audited? Am I doing it wrong? And this is a whopper. Am I leaving money on the table? If you want me to look at your numbers, I'm talking about your payouts, your platforms, your expenses, and help you get clear on what applies just to you, here's what you can do. Go to contentcreatorsaccountant.com/help-me. Again, that's contentcreatorsaccountant.com/help-me. That's not a sales call. It's clarity. We'll look at what's happening, we'll calm the chaos, and you'll leave with a plan. No pressure, just relief. Keep that link in mind because halfway through this episode, you might realize, Ralph, this is bigger than I thought. And that's okay. Well, let's get talking about write-offs. Write-offs confuse content creators for one big reason. Your life overlaps with your business. Truth is, your phone is everything. Your laptop, that's your studio. Your house, for a lot of us, that's our office. And for so many of us, your car becomes the recording studio or the set. And nobody explains where the line actually is. So for you, you either write off nothing because you're scared of getting audited, or you write off everything and just hope for the best. Neither feels good, right? But before I move on, this is a great time to comment about some of the crazy tax advice you've ever received. Feel free to leave those in the comments. All right, let's get back to those write-offs. And most tax advice wasn't built for creators, it was built for normal businesses. You know, the people with offices and employees and a clear separation between business and personal. We don't have that, do we? We've got creator chaos. And chaos needs clarity, not judgment. So I'm going to give you some clarity, not the kind of clarity that makes you feel like you have to memorize tax law. That's not what I'm going to do today. But I want to give you the kind of clarity that helps you make decisions without guessing. Because here's the truth. When you miss write-offs, you overpay your taxes. Sometimes it's by hundreds of dollars. I've seen returns where sometimes it's by thousands of dollars. Guess what? You don't get that money back. Or this one, you deduct the wrong things and you're anxious every single year, just waiting for a letter, hoping nothing comes up. And the worst part? Fixing it later is always harder. And guess what? It's usually expensive too. Messy records, reconstructing expenses, trying to remember what something was for a year ago. And this part matters. When you don't track correctly, you don't just overpay tax, you lose confidence. And when you lose confidence, you hesitate to hire that person. You hesitate to invest in your business, and you hesitate to scale because you don't trust the numbers. And if you don't trust your numbers, you'll always feel behind. All right, it's Masterclass time. People ask me all the time for a list of write-offs. They say, Ralph, just send me a list of write-offs, give me something to work with. But the problem is, there is no write-offs lists. It's more of a decision engine. And if you learn the engine, you stop guessing. I call it the 5 Ps. We're going to jump right into this. The 5 Ps are purpose, proof, percentage, placement, and pattern. I want to talk through each of these like a creator. Let's start with purpose. What did this help you do? Did it help you create? Did it help you deliver something? Did it help you grow your business? If you can't answer that, why are we deducting it? That's where it starts. Let's move on to proof. Proof is pretty straightforward, isn't it? Can you back it up? Do you have a receipt? Is there a statement? Do you have an invoice? And here's the twist. Receipts are evidence, but records tell the story. A note matters, a clean trail matters. How about percentage? This one trips up content creators all the time. I want to use something fancy called mixed use. Think about when you used your phone the last time. You used it for content and you used it personally. The internet, you're doing both things, aren't you? Your laptop, that's your recording studio. Your home, that's where your office is. And like I talked about earlier, your vehicle, for so many content creators, that's the set. And if it's mixed, you start wondering, what part of this is truly business, Ralph? Let's move on to placement. Where does it belong? Now, what I'm talking about here is things like gear. Gear is not software. Software isn't contractors, and contractors aren't supplies. And when you do this on your tax return, misplacing those expenses creates chaos later because the IRS is wondering, what is he talking about here? And then pattern. Does it match your workflow, your content model, your weekly reality? Now I want to give you 3 quick examples because it's easy to talk about things in theory. But let's talk about example 1, a lens for your camera. Let's work through the 5 Ps. Let's talk about the purpose. Lens for your camera, sure, better content. Like right now, I'm filming in 4K because I just upgraded my camera to give better things. So purpose makes sense, right? How about proof? A receipt and a statement. Sure, I bought that from Amazon. I've got the receipt. I've got a statement showing where I paid for it. How about percentage? Percentage is usually clean on this one. You're not going to use this camera for other things. Maybe occasionally you will. How about placement? It's all part of the production equipment. It's what leads to what you're watching on the screen right now. And pattern? It fits my weekly filming, doesn't it? See, that one's easy. The camera makes sense. Let's move on to example 2, that phone upgrade. Everybody likes the new phone when it comes out. I'm kind of a nerd. I got to have the latest iPhone. But let's talk about that one. Let's work through the 5 Ps. We're talking about a phone. Purpose. You shoot, you edit, you post. Well, that makes sense, doesn't it? How about proof? Proof on this one's pretty easy. You've got your carrier invoice and you've got the bill. Percentage? We're going to talk about this a little bit later, but this one is mixed use. And sometimes you need this, sometimes you don't. How about placement? To me, that one goes under communications. And pattern? It fits your daily business use because maybe you're filming with it, you're responding to messages, you're scheduling things with it. Pretty straightforward on the phone, but we might need to talk about that mixed use percentage. Let's go to example 3, and that's paying an editor. Let's work through the 5 Ps. Purpose? Hey, great, you're paying them because you're looking for the end output. You're looking for that final takeaway. Here's your proof. You've got an invoice and you've got a payment record, just like me. I work with a team. I can prove that I've paid them. I've got a credit card receipt. I've got an invoice from them. I've got notes showing what they've done for me. Let's talk about percentage. In this case, It's usually 100%. I don't know too many editors that are folding your laundry or doing your wash for you. Let's talk about placement. Placement for this one, contract labor. Now, it could be that you've grown to the point where they're an employee. We could talk about that later. But at this point, placement-wise, they're contract labor. Maybe we'll do a show about that, but the whole idea of giving them a 1099, don't miss out on that one. And pattern, this is one that probably shows up monthly. Every month, you're paying that editor, maybe they present you with an invoice. You notice what I'm doing here? I'm not asking, you never heard me say, Ralph, can I get away with this? See, a lot of content creators say, well, Ralph, what do you think I can get away with? What's the gray area I can expand? That's not what I'm saying here today. What I'm saying is, can I explain this calmly? See, that's the audit-ready thinking. Now let's move into a real creator story of somebody I work with. I work with a YouTuber, strong income, posting constantly, and he bought a top-tier laptop, spent $3,200. Nice laptop, I would say. And he deducted like half of it. And I asked him why. I said, well, why did you only deduct half of it? And he said, Ralph, someone on the internet said you can't write off the whole thing. But here's the thing, that laptop was his studio. He did his editing there. He did all his uploads there, created those beautiful thumbnails for YouTube. He delivered to his clients, and he even wrote his scripts there. So let's work through the 5 Ps with this particular example. Again, new laptop. The purpose was clear. This is what he's using it for. He's editing, he's creating content, he's responding to emails, he's scheduling things. The proof was easy. He had the receipt from the Apple store where he bought it, proved that he paid it. Percentage. Now here's one we could argue about a little bit. Almost all business use. Does he do it for personal stuff? Occasionally. Let's talk about placement. This is clearly equipment used for production. And pattern, it matched his workflow perfectly. This is what he does. He creates YouTube videos. See, he didn't need to fear, he just needed clarity. Let me ask you something right now. How many times have you played small on deductions because you just weren't sure? How many times have you left money on the table just to avoid feeling risky? See, that right there is why creators message me all the time. Because it's not just write-offs, it's confidence. See, that's what we're really talking about today. It's confidence. And if you're sitting there thinking, Ralph, this already feels like a lot to me, yeah, I told you at the beginning, there's a lot of moving parts here. And the moving parts don't make you bad, they make you normal. So always feel free to reach out to me at contentcreatorsaccountant.com/help me. All right, now it's time to share your comments. I want to throw some questions at you and I would love for you to comment. Here's comment question number 1. What's one expense you're scared to deduct? What is that one thing you're like, Ralph, I'm just not worried about this. I want you to just name it. Maybe it's your phone. Maybe it's your laptop. Hey, home office, we're actually going to talk about that next week. Maybe it's travel or subscriptions. I want you to drop it in the comments because listen, I read every single comment and I will respond to you because it tells me exactly where creators get stuck. All right, now let's go a little deeper because creator miss write-offs in places you wouldn't expect. So I'm going to tell you what I call my deduction map. I use with this creators all the time and it starts with 7 buckets. And when you see these buckets, you stop missing the quiet stuff. Let's start with bucket 1, production and studio support. Now, I'm not just talking about cameras and microphones. I've got a shotgun mic over here. I got a Shure mic over here. You can see the camera because I'm looking at you right now. But think about these things. How about the batteries? The batteries for your camera, your microphones. How about the cables? Because everything, unless you're going all wireless, everything's tied together. Well, as I'm talking to you right now through my prompter, I'm sitting on a tripod. That's something I can write off. The mounts for my lighting, those lighting modifiers, the backdrops behind me, the props, and wardrobe that's truly content specific. Now, we'll talk about that one here in a second. Because that one is where creators panic. Because you ask, wait a minute, Ralph, are you telling me I can write off clothes? Let me tell you right now, sometimes no, sometimes yes. The difference is purpose. You want to go back to those 5 Ps again. If it's everyday life clothing, that's personal, you can't write it off. But if it's costume, like now, I'm not wearing a costume now. I'm wearing a dress shirt, which I'm going to meet with clients later today. That one's probably personal life. But if you're using something that's a costume, maybe on camera specific, maybe it's branded or required, that's a business conversation. Let's move to bucket number 2, and that's post-production and people. We kind of alluded to this earlier. These are your editors, the people who are actually putting the final product together. When I record this, I'm going to send it off to my team. They're going to put it together. That's what I call my editors. How about audio cleanup? Whether that be AI tools, or maybe you have someone that does the editing for you. How How about those thumbnail designers? If you want to get anywhere on YouTube, you gotta have an amazing thumbnail. How about video repurposers? Whether it be software or people who create it. We do that with our show. We have somebody that creates the shorts and the reels and the TikTok things. And how about virtual assistants? Hey, as I'm recording right now, my VA, Abby, and I are having a conversation. That's all part of that post-production and people. So if someone touches your content, it's part of your cost to create. That's a check mark. That's deductible. Let's move on to bucket 3, platforms and delivery. Now, this one seemed pretty obvious, but people miss these as well. How about your hosting? Now, if you're using YouTube, you're not paying for that. But if you've got Captivate or Libsyn or Buzzsprout or one of those podcasting things, that hosting is deductible. How about those distribution tools? Things like Repurpose or Patreon or Kit. How about your website? A lot of people miss that one. Your website builds the business, the domain you bought. Maybe you got it from GoDaddy. How about that email platform? If you're using ConvertKit or one of the other MailChimps or something like that. And listen to this one. A lot of people miss this one. Payment processing fees. If you're collecting money, you've got Stripe fees, PayPal fees. See, creators miss these constantly, but those all fit into that third bucket. Let's move on to our fourth bucket, marketing and growth. Things that you would have here would be spending money for ads. Any promotional assets, maybe you do stickers or you're sending out promos for your show. Maybe you create a landing page. Maybe you're giving away lead magnets, or maybe you spent some money and built a brand design kit. All of those things fall into that marketing and growth bucket. Let's look at bucket number 5, and this is one a lot of creators miss out on, and that's education and skill building. A lot of content creators say to me, Ralph, what do you mean? I can deduct these things? Yes, you can deduct the courses you go to, workshops you go to. Podfest just ended a couple weeks ago. You can deduct the expenses for that, those conferences. If you've got a coach, yes, if a coach is helping you improve your content, I've worked with many coaches, that's deductible. Here's another one a lot of people don't think about. Maybe you belong to a mastermind group, and if that mastermind charges a fee, that's deductible, because here's the big 30,000-foot view. If it improves your ability to create or to earn, it belongs in the discussion. The IRS would see that and say, oh, that makes sense. Let's talk about bucket number 6, and that's travel and on-location content. We're going to come back to this a little bit later today, because travel is where it gets complicated fast. Now let's get to bucket 7, and this one gets complicated too, and we're going to talk about a lot of this next week, but it's home office and communications. Things like your phone, the internet. Listen, everything we do is on the internet. The other day, our internet was out of the office. I didn't know what I was going to do with myself. Workspace cost, a portion of your utilities. Yeah, I got lights on right now. I'm recording. I got electricity going, but make sure that portion truly qualifies. Now let's talk about the silent killer. Now, if you've listened to me for any time, you know, I believe that subscriptions are a silent killer, and creators miss write-offs through death by 1,000 cuts all the time. And don't just miss them, you forget you're paying for them. I'll give you a real creator story. Creator tells me, really, Ralph, I don't even spend that much for my show. And I said, wait a second, now I'm a creator too. So I kind of knew what to look for. I said, here's what I want you to do. Give me all your credit card statements and your bank statements. And they said, oh, wait a minute, you're going to really get in deep. I said, yeah, here's what we did. We looked at those things. Guess what I uncovered? 18 subscriptions. Canva, Adobe, Descript, stock music, plugins. I'm going through a list here. Cloud storage, caption tools, email platform. When I added them all up, guess what that was? Over $3,000 a year. Now, they weren't broke, but they were untracked. And here's the part that stings. They didn't just miss the write-offs, they missed awareness. Because when you don't track it, you can't control it. And when you can't control it, tax season feels like a surprise attack. Nobody needs a surprise attack. So I want you to hear this contrast. Internet advice says, and we talked about this earlier, internet advice sometimes says, hey, if you've got content creative, you can write off everything. I write off everything. But then you start to think about it like, wait a minute, but Audit-Ready thinking says, write off what you can explain. And one of those things is loud. The internet is shouting all kinds on Reddit and all these other list servers, oh, you can write off everything. That's shouting loud at you. But that Audit-Ready thinking is like, wait a minute, I want to make sure I'm safe. Now, I want to clarify something here. Safe doesn't mean timid. It doesn't mean you're not aggressive. Look, I work with accountant people. I work with business people every day. I work with content creators just like you. You can be safe and still be aggressive with this. But safe means clean. And clean is where we end up being. Clean story, clean trail, clean categories, all those 5 P's I talked about. And categories matter more than you think. Because here's the problem. If you've got bad categories, it creates confusion. And confusion creates fear. And when you have fear, guess what happens? You don't do anything. So here's comment question number 2. Again, I would love to hear what you have to say. What income stream confuses you the most? Is it the AdSense? Is it those sponsors? That affiliate income that seems like it's coming in from 12 different directions? How about the silent killer, those subscriptions or courses? I want you to drop it in the comments because your income type changes how clean your system needs to be. And yes, this is a moment creators usually reach out to me because they realize, oh, Ralph, wait a minute, this is bigger than I ever thought. That's not shame, that's awareness. And again, you can schedule a call with me right now by going to contentcreatorsaccountant.com/help-me. All right, let's move into our weekly Mythbuster section. I want to bust 3 myths right away, real fast, because these myths are why creators bleed money. And I'm talking about creators that are bleeding money. And it's not because you're careless, it's because nobody ever showed you the clean way to do it. Here's myth number 1. I'm too small for write-offs, Ralph. Listen to me. If money came in, expenses matter. Because the IRS doesn't care if you made $1,500, or hear me on this, or $150,000. They care if it's ordinary and necessary for what you do. That's really the big answer to this. The IRS says expenses are ordinary and necessary for what you do. And every creator I ever met has had expenses from day one. Here's what small creators forget. Did you buy a microphone? Oh yeah, you did, didn't you? Do you have a light? If you're doing anything on YouTube or video, you probably got some lighting. You probably got some editing software. Did you pay for Canva? Do you have Adobe? Did you pay for some stock music as your show started? Do you have a website? Do you have an email list? Where do you store all that stuff? Cloud storage? And then you say, but Ralph, it's not worth tracking. Let me give you a real life example. Let's say you make $2,200 this month. If you ignore expenses, you feel fine. You're like, oh, no big deal. I just made $2,200. But here's what you paid for. You paid $39 for Canva. You paid $23 for domain and email. You paid another $22 for that Google Drive. $49 for a scheduling tool so you can have people come on your show. You bought that $97 course. You bought a $180 plugin for Audacity. You bought a $300 you spent to your editor and $85 for tripod and cables. Those things aren't small. That's your profit disappearing in quiet little subscriptions. And here's the punchline. Write-offs aren't just for big creators. Write-offs are how small creators survive long enough to get big. I want to say that again because hear me on that. Write-offs are how small creators survive long enough to get big. You want to get big? Start here. Let's move on to myth number 2. Write-offs cause audits. Man, I hear this one all the time. I see this on comments on LinkedIn and Facebook. Write-offs cause audits. That's not true. They don't. What causes audits are messy records, and guessing games cause audits. Clarity does not. Write-offs don't scare the IRS. What scares the IRS is this. Trust me, bro. Bookkeeping. That kind of bookkeeping scares the IRS. Numbers that don't match payouts. That scares the IRS. Expenses that have zero explanation. A pile of Amazon orders with no business purposes. That's the things that scare the IRS. And listen, creators do this one constantly. They write off equipment, but can't explain what it was, when it was used, and why it mattered. Let me give you an example. Let's say you buy a new camera. Oh, Ralph, this is easy. I'm filming with this. You buy a lens. Okay, I get it. But how about this? A Best Buy run that includes a laptop, some new AirPods, and a Nintendo Switch. Now we got a problem, don't we? Not because the laptop is bad, because your records are messy. Or this one, we talked about this earlier. You deduct travel, but on your bank statement, it just says Marriott and Delta. IRS looks at that and goes, Marriott where? Delta to where? No notes, no event, no client, no deliverable. And then you're surprised you feel nervous at tax time. It's not the write-off. The write-off is fine. It's the lack of a story behind it. Clarity is what makes you audit resistant, not playing it safe by overpaying taxes. And see, overpaying taxes is not a safety plan. It's just expensive fear wrapped up like a safety plan. Let's look at myth number 3. I hear this one almost daily. Ralph, I'll fix that later. When are you going to fix it? At tax time? Here's the truth that I've learned. Later is more expensive every single time. I don't care what you tell me. Later is always more expensive. Here's what later turns into. it turns into lost deductions because you forget about it. Or maybe you just don't have the receipt at all. Mystery transactions. I'm working with clients right now doing their taxes. I'm asking about stuff that happened last March, and they're like, Ralph, I can't remember what happened yesterday. Or panic bookkeeping, that rush to get those tax decisions done. See, later is where creators go to get surprised. And you're thinking, Ralph, surprised by what? Here's what they get surprised by. A tax bill you didn't expect. You come to see somebody like me and I say, hey, Calvin, guess what? You owe $3,000 in tax. You're like, how is that possible, Ralph? It was a sneak attack, wasn't it? No, you didn't keep track of it. Or a profit number that isn't real profit. You're like, Ralph, here's what I got done, but I didn't keep any expenses. So guess what? It's all profit. Or a bank balance that lies to you. Here's real life. And this happens to creators every single day. You had a great month. That brand deal hit. You got some AdSense money. You're starting to sell some affiliate stuff. So you spend some money. You buy that new camera. You get that new fancy desk. You hire that editor. And then 3 months later, your CPA says, guess what, Joe? You owe $12,000. And you say, what? How is it possible? I don't have $12,000. Because later means you never built a system to keep the tax money separate. Get on my high horse about that one. But later means you never tracked profit. Later means you thought cash in the bank was income. But it's not, because here's the truth. The creator who fixes it later always pays for it twice. Once in taxes, and then again in stress. And let me just tell you right now, that stress costs a lot more. And here's one more. I'm going to give you a bonus myth today that creators love. My receipts are enough, Ralph. Yes, receipts are evidence, but records tell the story. A receipt proves you bought something. Sure, we can't argue with that. You bought it. But it doesn't prove what it was for, how it supports your content, whether it was personal as well, whether it was a business asset that you purchased, whether you should depreciate it, whether it belongs in cost of goods sold. I know I'm getting a little bit into the accounting lingo here. Whether it's reimbursable, whether it's a contractor expense, maybe you need to give them a 1099, or whether it's even in the right year. Man, I see that all the time. Receipts don't answer questions. Records do. And let me make it painfully real. Let's say you bought an iPad. Receipt says iPad. Okay, that's fine. But what was it for? Was it a personal iPad you watch Netflix on? Was it a business tool used for scripts and edits? Was it bought for your kids at school? The kids need an iPad. Was it partially business and partially personal? Or is it tied to your content workflow? See, if you can't explain it calmly, it's not ready. And that's the standard. We're not talking about perfection today. We're talking about calm clarity. Because calm clarity is what makes you pay less tax legally. Hey, the Supreme Court decided many years ago, it is your right to pay less taxes, but you got to do it legally. You don't want to end up like Al Capone in jail. Being calm also helps you stop feeling behind, stop being afraid of your numbers, and actually run this thing like a business. And that's the whole point, isn't it? Let's put this into real life. Because these myths don't live in your head. They live in your calendar. They live in your bank app, in your inbox, and for so many of us, in our Amazon orders. So I want to put you in a lane. We always talk about lanes on the show. Now, this isn't about labels or shame, just a roadmap, because every lane has a favorite myth tied to it. And that myth is what's costing you money. Let's talk about lane one. You're the early creator. You've got some income coming in, lots of overlaps. Everything is kind of mixed together like a big old salad. And this lane's favorite myth is, I'm too small for write-offs. So real life looks like this. Your payout hits on Tuesday. You feel a little relief. Hey, I can buy some stuff. So you jump on Amazon or you go to Sweetwater, you buy a mic, you buy a light, a tripod, you get that Canva, and you subscribe to a course. And it all goes on the same credit card. But here's the problem. It's the same credit card you buy groceries with. So when tax time comes, you know you're spending money, but you can't prove it cleanly, can you? So you do the thing creators do. You shrug, you guess, and you underclaim. And then you say to yourself, you know what, I'll fix it later. But later turns into, I missed it. Your next step, if you're in that lane, is to start by separating and tracking. You're probably saying, Ralph, you're a broken record. But this is what you've got to do. Because if you're using one bank account for everything, you're not disorganized, you're living in hard mode. And hard mode always costs more. Let's move on to lane two, what I call the growing creator. Now you're making consistent money. Every month, you got more tools, you got more income coming in. But you're adding more to it. You got more tools, you got more subscriptions, and maybe you even got a contractor like me. And this lane's favorite myth are, hey, my receipts are enough, because write-offs cause audits. So real life looks like this. Your card has 47 transactions a month. Half of them are Stripe fees, Adobe, Canva, Descript, Notion, ClickUp, TubeBuddy, CapCut, Kajabi, Teachable. There's a lot of things out there. And then you've got apple.com/bill. What is that? Or Amazon Marketplace or PayPal something. Yeah, you've got receipts, but you don't have a story. So you either dump it into one bucket called software, I see that happen a lot of times, or you don't categorize it at all. And you hand your accountant a mess and you just hope and pray. And then you get nervous. Not because you did anything wrong. Nobody's saying you did anything wrong, but you can't explain it, and you certainly can't explain it calmly. That's what creates audit anxiety. It's not the write-offs, it's the mess creating that anxiety. But clarity creates confidence, and your next step is systems. So if you find yourself here, do that monthly review I've talked about. Clean those categories up and stop guessing. Because once you're growing, guessing gets mighty expensive. Let's look at lane 3. This is my established creator friends. Multiple income streams, AdSense, affiliates, brand deals, courses. Maybe you're doing some coaching. Maybe you've actually got an agency. Maybe you've built a team. You've got big tax impact here. This lane's favorite myth is, oh, you know what? I'm so busy, I'll fix it later. Because you can't afford to delay it until you can't. And then tax time comes around. And real life looks like this. You've got contractors. Oh, do I need to 1099 them? You got an editor, a thumbnail designer, a VA, maybe even hired a bookkeeper. And you're buying gear, you're traveling, you're upgrading, and you are so busy. I get it. I'm right there with you. So you do the dangerous thing. You just assume that'll work out later. And then you get to March and you realize, man, I didn't track anything cleanly. Your income streams aren't reconciled. Your contractor payments aren't even organized. Your mileage, who knows where you went. Your home office is unclear, just like the mess you're sitting in. Your gear purchases aren't classified right. And now missed write-offs isn't a few $100s, it's a few $1,000s. See, this is the lane where a good system doesn't just save you stress, it saves you real money. See, what I talk about on this show is real money things. So your next step is precision, planning, timing, and quarterly strategy. Because when you're established, it's not about finding receipts. It's about making decisions on purpose. Now, here's the question for you. Which lane feels like you? Comment right now. Are you in lane 1? Are you lane 2? Or lane 3? And listen, be honest with yourself. Because if you pick the wrong lane, you build the wrong system. And then you up believing the same myths in a more expensive way. So now I'm going to give you, I talked about this at the beginning, I'm going to give you a workable decision process. And this is where it starts to feel complicated. Because it's when you do it alone, it gets hard. But let's jump right into it. Step 1. What did you actually earn? Now, I'm not talking about deposits, not that gross type, oh, I did this much money. No, profit. Do you even know what your profit is? Here's step number 2. What did you need to produce that income? See, we started with the beginning. What was the income? What was the real income? And step 2 is what did you need to produce that income? Not would be nice, what did you actually need? Step 3, is it ordinary for your work? Editing software is ordinary. Hosting is ordinary, and contractors can be ordinary. Step 4, we talked a little bit about this earlier. Is it mixed use? Because mixed use is where do-it-yourself taxes go to die. Man, I see these mistakes all the time. Things like your phone and the internet, laptop, home office, vehicle, travel. If you're guessing percentages, you're gambling. And step number 5, do you have a proof trail? Like breadcrumbs on the thing there, right? Do you have the receipt, a statement, an invoice, but bigger than all those things, a note that shows the purpose? Now, I want to share a mini case study with you. This one will talk you through a big example here. Let's say you're a content creator, you're earning $92,000 for the year. You've got multiple income streams, AdSense, sponsors, some affiliate, you got some subscriptions coming in, and the expenses they thought they had were about $16,000. But when I tore this apart, I did some what we call forensic accounting. I actually found they had $27,500 in expenses. Guess what that is? That's $11,500 in missed deductions. You'd be saying, okay, big deal, Ralph, $11,500. What's the impact? Depending upon your tax bracket, that can easily be a couple $1,000s, sometimes even more. Now, it's not a guarantee, but it's real money. Here's another case study. I got this one creator earns $180,000 a year. Again, multiple streams. They track those expenses. When I looked at these categories, I'm like, who did this? A 5-year-old? These don't make any sense. They had gear mixed with meals, subscriptions mixed with supplies, and travel mixed with all kinds of personal stuff. Now, on paper, they had $22,000 of expenses. But after cleanup, they had closer to double that, 48 grand. And it's not because we invented anything, because we found what was already there and documented it properly. See, that's the difference between having expenses and having a system. Now, we talked a little bit about this whole split use thing, and I want to talk to you about that in a way that actually helps you, because split use is the part that makes creators say, Ralph, I need help with this. Here's a simple method. Pick a reasonable percentage, whatever that could be. Write it down and use it consistently. Not perfect, but consistent. Let's talk about your phone. Ask yourself this. How many hours a day are business related? Think about your phone. It's in front of you all the time. It's with us all the time. How much of that is used for business? Doing posting, shooting video, editing, sending messages, emails, brand deal calls. And listen, if your phone is your studio, your business use is real. That percentage could be higher, could be close to 100%. How about internet? Internet's one, again, business personal use percentage. Ask yourself this, do you upload weekly? Maybe like me, you do one show that's daily. I've got one show that's a daily show. We're uploading all the time. Do you live stream? Do you send files to editors? Yes, if you do any of those things, there is a business portion. You got to figure out what that person is for you. I can help you with that. Let's talk about home office. Like I said, we're going to talk a lot about home office next week, but here's the line. I don't want to get into big, IRS code lingo, but is it dedicated space? Is it used regularly and used only for business? Now, if it's your kitchen table, don't force it. If it's a room that's clearly your studio, like what I'm sitting in right now, this is my studio. This is all I use this for. That's a real conversation. Now, I mentioned earlier, we're going to talk about travel. So let's get to that right now. Because travel deductions don't hinge on vibes. A lot of content creators say to me, well, I got the vibe, like I can deduct this. That's not what travel is all about. They hinge on purpose and proof. The primary purpose was business. Was it that? Was the primary purpose for that travel business? Yes or no? Ask yourself this. Do you have an itinerary? What did you go on that trip for? Well, I attended PodFest. I attended some other training event. Okay, you got an itinerary for that. Did you keep receipts? Was your travel documented? How about the hotel stay? Were there any deliverables? Did you come away with something? A shot list? Did you have pictures and video you took? Maybe you walked away with a brand agreement. That's all stuff you can use to justify this. Because if the story, I go back to this again, if the story is messy, the deduction feels stressful. I work with clients every day. If you've got a good story and you've got the receipts, it works. Let me give you a travel story. Creator takes a brand trip. That was what they wanted to do. They wanted to go make some shooting, so they took a brand trip. They deducted everything. They deducted their flights, their meals, the hotel. But here's the problem. There was no story. He didn't have an itinerary, no deliverables documented. Now, every tax season, they're anxious. And it's not because deductions are evil. It's because the story was messy. And that messy creates stress. See what I mean? This is where creators go, okay, Ralph, I'm overwhelmed. Well, guess what? I'm glad you're overwhelmed. Not because you can't do it, because you're finally seeing this is a real business system. And that's why creators reach out to me. Because I can look at your numbers, I can look at your streams and your workflow and build a clean plan just for you. Here's my comment question number 3. Which of these is your biggest headache? Is it your phone? Your home office? Maybe travel? Subscriptions? Just drop one word in the comments. See, here's the moment I see over and over. I work with a creator doing well, but they say, I'm scared to look. And when we open everything, we look at the income streams, they realize they build a business without a money system. And it's not because they're careless, it's because nobody taught you how to be the money person too. And that's where I come in. I help you build the system behind the content. And this is really the moment most people message me, when the income is growing, but your confidence isn't it. Okay, it's time for our weekly audit section. I want you to answer these out loud. And if people are around, it's okay. They won't think you're crazy. Do I know my profit from last month? Ask yourself that question. You got to know that. If you've got a system, you'll know what your profit was from last month. Here's another question. Do I feel calm explaining my deductions? Can I calmly explain what this was for? Do I have records or do I just have memories? Here's a big one. If the IRS asked questions, would I panic? Now listen, if any of that felt uncomfortable, that's information. That's not shame. That discomfort is a signal. It's your business telling you it needs structure. Now, I'm already hearing objections. I can hear them through the screen. So let's handle those right now. A lot of people say, Ralph, I'm not big enough. You don't need to be big. You need to be clear. And like I said, I fought this one a couple times already. I'll do it later. What did I tell you? Later costs more. I hear this one almost once a week. I don't want to spend money. I don't want to spend money either. But guess what? Messy taxes cost money too. If you're real busy, you're saying, Ralph, I'm overwhelmed. But that's when systems matter the most because chaos is expensive. And clarity, once you do it, it pays for itself. And if this hits, you don't have to know everything. You just can't keep guessing. And if you want clarity, I've mentioned this a couple times, that if you want clarity for your particular situation, go to contentcreatorsaccountant.com/helpme. When you do that, here's what happens. We talk, we look at your real numbers, and we map out a plan. No pressure, just come. And if you're not ready, drop your questions in the comments. Like I said, I look at all these. Tell me where you're stuck, because I'd rather get you clear than help you keep guessing another year. Again, that's contentcreatorsaccountant.com/helpme. Listen, friend, as I close out today, you're not behind. You're a creator building a real business in a messy system. It's what I call content creator chaos. Write-offs don't have to feel scary. They just need to be understood, and you have to be able to tell a story. And once you understand them, you stop shrinking, you stop guessing, and you start running this like the business that it is. So if this helped you today, I want to encourage you, subscribe and follow. My whole goal is to help you keep more of what you work so hard to earn and break down the content creator money chaos in something you can manage. I'm Ralph E. Stepp Jr. I am the Content Creators Accountant, and I'll see you next time on the show.